So it's no secret that the average home value in the United States has skyrocketed over the last 4 years. In fact, this used to be my house. I sold it in 2020 for around $245,000, and well, today it's worth $400,000. Now, does it bother me that I didn't keep it, despite my gut telling me not to sell during that time? No, it doesn't bother me at all. I only cry myself to sleep on weekdays now, and my therapy hours have gone from 20 to 18 just this past week. But nonetheless, a lot of people believe that because home prices shot up so high, that eventually it'll have to crash, right? I mean, what's the saying that everyone says? What goes up must come down. Except if you look at the housing market over the course of the last 20, 30, even 40, 50 years, well, it actually never went down. Now, I know what you're probably thinking, but Daniel, all my favorite YouTubers have said that there's gonna be a housing market crash soon. But I do think I bring a different perspective considering that YouTube is kind of the thing I do on the side, and I had 87 apartments owned by the time I was 23 years old, and I've scaled multiple 7-8-figure real estate companies since then. So here are my 3 reasons why I believe the housing market won't be crashing anytime soon, but if it did at all, it would actually happen in 2029 or 2028. Which leads us to reason number 1, which is still the lack of current inventory. Now, your normal healthy housing market is going to have a seasonally adjusted active listings count of between 1.1 million to 1.3 million. But if you look at the latest data shown, we're actually at 884,273 as of July of this year. So relative to the last 10, 15, 20 years, we're actually still significantly below that average, and it's even worse considering that we obviously have more people and more potential buyers compared to 10, 15, 20 years ago. But here's also another reason why our market today is significantly different than it was 10, 15, 20 years ago, is because, well, we have more institutional buyers of these single family homes more than ever before. And we're not talking about small time investors that are just gathering a small portfolio, or even that one individual that's renting out their second home on Airbnb or VRBO. I'm talking about companies like BlackRock and other Wall Street entities that have significantly gobbled up millions of single family homes in the United States. Now, this leads us to reason number 2 as to why the housing market crash won't be happening anytime soon, which is that yes, housing units are being built, but not the way you think. Now, I bring this up because I know some of you guys are thinking, well, Daniel, of course there's going to be a crash soon. There's a record amount of active inventory that's going to enter the market, and that's going to, shatter home prices. It's going to plummet all the way down. Idiot. And yes, you're right. Not about me being an idiot, but you're right about the total amount of housing units currently under construction. In fact, if you look at this chart right here, you can actually see that we're near record highs by far, and we've got currently a little over 1.5 million housing units under construction here in the United States. But if you actually take a closer look and see what is actually being built, you see that a vast majority of that is actually apartment units under construction. And the single family housing construction in the United States is actually still quite average currently. That sounds really familiar.
The Great Reset.
And that leads us to, last but not least, the third reason, which is that housing demand is still very, very strong. In fact, according to Redfin and a lot of other public platforms, you still have 35% of homes that are still being sold above the asking price. And with interest rates cutting down here pretty soon, that's most likely going to trigger millions of more Americans entering the home buying market. As my friend Jason Hartman would say, that for every 0.5% that the interest drops, especially in mortgages, you're actually introducing about 2.8 million potential buyers into the market. Now, with all that said, here's why if there's going to be a housing market crash, I predict it actually won't happen until 2028 or even 2029. And that's actually because the housing market right now doesn't actually remind me of 2006 or 2007. It actually reminds me more of 2004 and 2005. And I say that because of the record amount of Americans with their houses either paid off or really strong equity in their home. In fact, as of right now, over 40% of Americans have no mortgage on their home. Their houses are completely paid off. And there's currently about $32.7 trillion worth of home equity that us as Americans have nationally. And yes, that is by far a record number. And because of the strong housing market, and I'm already starting to see it like it happened in 2003, 2004, 2005, it led to a lot of really loose and aggressive loan financing programs.
Go to bank. I said, Kelly, we got So those banks were underwriting the paper to the middle grade banks that were lending money to the dirtbag brokerage operating out of a van places that I work.
And this is already starting to happen now, as you have loan programs all across the country that are becoming more aggressive and actually offering no money down loans. Now, personally, this is the most frustrating part, because instead of our government incentivizing developers to build more homes and regularly and naturally balancing out the supply and demand curve, making homes cheaper, by the way, for the first-time homebuyer or any homebuyer for that matter, they would much rather push and incentivize loan programs to be more assertive and subsidize that, thus setting up so many of Americans for failure. I mean, it's pretty much the US government saying, hey, instead of making homes more affordable by helping developers build more of it, let's instead push out really, really shady loan programs and aggressive loan programs so that you can actually all bid more on the same number of small houses that are currently in the market. And whether it was the 70s or the early 2000s, the mid 2000s, this always leads to millions of Americans owning homes they actually can't afford. And well, we all know how that turned out, especially in 2008. And I worry that the same thing is actually starting to happen now. So if there is going to be a crash, I see that happening actually 4 or 5 years later because of the strong housing market today, incentivizing a lot of institutions and governments to push out really, really aggressive loans. So that being said, I might be wrong, who knows? Leave your thoughts in the comments below. And of course, per usual, I'll see you guys in the next one.